Okay, you ready?
Yeah.
3, 2, 1. Good evening, traders and investors. Welcome to this special Monday edition of Pre-PreMarket Prep with StockOdds. I'm your co-host, Joel L. Connon, along with Rob Friesen, joining us from Vancouver. Let's just take a quick look at the markets, and we will get going on with the show. We got a really big show lined up tonight, and we're actually on the screen here right before the open. Folks, we sold off a little bit. I'll talk about that with Rob in 1 second. Last night we got up to 42, 10 and a quarter. We sold off down to 41.95.75. So folks, no, we're not down up $2. We're down $9. I got to fix the trade station on this. Crude, that's up 11 cents at 67.03. Gold's doing okay. Gold's up just flat here. Let's call it up 30 cents at 1909.60. Silver, I'm glad to see that's back above 28. That's trading at 28.15. That's up a couple pennies. Bitcoin, they had it over up over $1,000 over the weekend, but no can do. We're down $255 at 36,945. Ethereum, that's down $12.50 at 26.50. Let me bring in Mr. Friesen, and I have a question for you.
Yeah, what's that?
Don't you feel that, like, on these Mondays like this and the Sunday night trading, don't you feel like you're cheating a little bit? Like you're getting an extra edge? Like you're trading at 6 p.m. open, you're trading until 1 o'clock in the afternoon? I mean, it's like, why go to work tomorrow? It's like you're cheating. You're cheating.
Yeah, from
me
you,
I'm not
Joel,
a cheater.
So we get this insight, we get this crystal ball into the future value of the S&P, right? The future value of these instruments. This is amazing. Joel, love you, man.
All right, Rob. Well, what do we have tomorrow? We have the beginning of the month, May 31st, that Friday. That was the absolute last day you could have an end of the month. It happened not much of a day, kind of a quiet day, but we're heading into the first day of the month, going into June, start of the end of the quarter. Rob, what are we looking for? I unshared my screen. I will let you take it away.
All right, let me switcheroo things around here a little bit. We don't want to delay, but let's see here. We'll just go back and start this thing here from the beginning. How about a Memorial Day show?
Yeah, I just a shout out. We talked about that a little bit this morning to all the thousands and millions of soldiers that sacrificed their lives so we could have what we have, and crazy times, but we need to celebrate here or help people think about their loved ones during this Memorial Day. And anybody that served, I'm surprised you didn't say anything about my outfit. I'm a little disappointed that you didn't notice my flag shirt and my bandana, but that's okay. I really don't like what you are wearing anyways.
I noticed. I just forgot to say something about it. But anyway, did you ever have family in military?
My dad, yes, yeah,
Okay.
yep. Well, listen, my dad was in during the Korean War, after college and before law school. My grandfather was a doctor, and
wow.
actually during World War II. Yeah, he went overseas. Actually, I was looking at some of my dad's stuff, and I found a lot of his medals. He was like in those MASH units. Dr. David Victor Elkanen.
Oh, wow.
And but Pops died a while ago. He died in 1973. But what about you? Do you have any? Well, wait, you guys don't have an army, so you can't have anybody in the military.
Yeah, we'd help you out. We'd send you some canoes or
Hey,
some
just one thing.
ultralights.
Okay, so you guys are you doing better over there?
Hey, Canada's had some moments in history related to helping out. So there's been some good events. But anyway, yeah, let's I know you don't want to be too long today, so people are out enjoying the celebrations as well. So let's get started here on the seasonality. So At the time of this preparation, I have no idea what the futures will be doing, right? But I can look ahead to the statistics for June 1st. I can also view the whole month of June to be prepared. This provides a probability backdrop and a great context. We can look to add other contributing or canceling factors. So you know how you can have a probability skew, but what can you throw in there? Like what could be impacting what you intend to do? Let's say you want to use the stats, you want to use history, you want to go in there with some great ideas. What could interfere with that, Joel?
The market.
The market could have other ideas from some sort of catalyst, right?
Right. A lot of different catalysts. I mean, you have the overseas markets that's eventually going to come in, but a stock, you could come in long a stock. You had the greatest setup. Goldman Sachs, I'm just using this as a point, comes in, downgrades the stock to a sell, or the company has accounting problems, or something like that. So no chart can it account for all those different factors?
But you said the futures are off a bit now. And does that mean they'll stay like that before the open? Does that mean tomorrow will be down? See, we don't know that either, do we?
Absolutely no idea.
So, I mean, the longer I've been in this business, Joel, the more I just rely on the statistics and hedge. And you know what? It's amazing to sort of get that monkey off your back of having to be right on all the directional stuff, right? Because it's tough, and especially with swing trading. The only way, I see good quality swing trades that are risk averse is to pair them off with really great, pair ideas. So, but, we could have some factors that benefit too. So the trader's risk can be significantly lowered by having both short ideas and long ideas and putting them together. And this is a robust way to approach.
Just in the chat, how many of you people trade long and short? That you have different stocks, because I know that's one thing. Triple D is amazing. He could trade some long, he could trade some short. But how many out there? How many of you are actually strategically dollar hedged in these markets? Because not all stocks go up at the same time, and not all, just the market up and down all around. That's what I think people really need to learn. That's one thing we like to preach.
Right. Well, I know at Bright Trading, like we hired years and years ago, we hired a regulator from the Philly that became our compliance officer. And she used to audit, prop firms. And she said that she saw, a lot of success with Bright Traders, primarily, I think, from pairs, from opening only orders, just from being hedged in general. And that theme has been consistent through all the years. The top 10 seem to always be people that hedge, and there's a variety of styles of hedging, but
can you talk pairs in one sentence and opening orders only in one sentence or two sentences?
Not mix my metaphors, eh? No, I mean, pairs are simply like, an obvious one is Coke against Pepsi or Home Depot against Lowe's, but you can get really specific into how about Royal Dutch A and Royal Dutch B? I mean, it's a pair that's very, very tight because it's the same company, two classes of stock in the same company. So you can get as insulated from market movement as you want, but opening orders are more related to gauging, where the implied open is for a stock. Like every day, if the futures are gapping up, right, the futures are trading up, then you know that the stocks will probably trade higher from the previous close. So the question is, how much higher than their implied open are they trading? How much lower than their implied open are they trading? That still is relevant to this day, even though we don't do opening orders the way we did in the past. We use them in terms of getting a good pair on, getting baskets on, things like that. Some people trade overnight and sell at the open. Some people trade pre-market and sell at the open, so there's a variety of styles. But if somebody actually thinks about where is a fair price for their stock to open, then they could gauge whether it's been bid up way too high excessively, or it's trading below its implied open. So we can get into that more on future topics, but So we want to, we want to scale our business beyond just one-off trades, right? Here's the month of June at a glance. IWM is on fire for the month of June. You think that's the Russell rebalancing effect, Joel?
I
Like
do.
why the Russell to outperform the SPY so much for the month of June? This is historic, by the way. I would think it's Russell rebalancing
Yep.
effect, right?
Yep. And you kind of had the trend going into it, right?
Yeah,
I mean, that people,
well,
and just one thing about these rebalances, folks, people are doing their homework in January and February. And it's pretty simple math to follow the capitalization of companies going up and going down. So
well,
there's
and what's
people
been
that
added,
play these
yeah,
even longer than 6 months to a year, right, Rob?
right. Well, anything that's been added, anything that's IPO'd has to be added to the Russell, right? So there's a lot of rebalancing, and I think that that's the reason for that outperformance, because that's pretty excessive, 2.6% compared to 1% for the SPY. And then Tuesdays are positive, and then we have both a Monday and a Tuesday effect in one here because we're closed today. So coming in tomorrow, well, the Monday is the Tuesday, and the Tuesday is the Tuesday. So I think we're good to go there. So it's interesting that the futures are down ahead of this, right? Then we look at the first trading day is positive, right? So the IWM slightly outperformed the SPY for the first trading day of the month. So this is our backdrop, right? This is our historic perspective. Does it mean it has to happen exactly this way? No, but at least I'm informed in terms of what could happen, maybe what should happen, what is the probability of it occurring.
Hey,
So
can I just let me
look,
throw one thing in here?
yeah,
If you were looking at your stock odds and you look at those probabilities and you look at where the SPY's closed, you might have been looking to buy that reopen at 6 a.m. because you're already getting a discount on the market, right? From the probability standpoint. So
yeah,
if you were so inclined to buy it, it gets back to flat on the session unchanged. Everyone's trying to get out scratch. You could be up on the day if you have, if you have the odds in your favor and you can use the pre-market and after hours to your advantage.
I'm really glad you brought that up because like that's what we look at a lot in terms of our screens. So basically what stock odds is a whole bunch of indicators that we've curated, technical patterns, relative strength, all kinds of different things. And we like to see what the subsequent performance is after the indicator signal or after the technical pattern. And if we are forward looking like that, then what we want is this discount. So when we've done our screens, we found that the last performance often gives us an advantage. Example would be if something had traded down the day before and it penetrated its lower Bollinger Band, and it says that the odds and the subsequent performance afterwards was significant. Well, I get to start from that perspective of that the previous session was already discounted. If I can get a further discount, like pre-market or at the open for that same instrument, it doesn't guarantee me a profit, but wouldn't you rather have a starting point that's already on sale? I mean, isn't that beneficial, especially when you can see that the subsequent performance is supposed to be great, right? Yep. So where you start, don't you think in trading, I find too much nowadays, everybody's sort of chasing the future potential by, oh, it's going up. So the cognitive bias kicks in, like it's up, so therefore it's going up further, right? And it's going down, that means it's going down forever, instead of taking the discount premium approach with a mean reverting attitude. I mean, that's what's made money throughout all the years is mean reversion, far more than trying to get your trends perfectly right. Right. So anyway,
that's the way some people trade. I mean,
trend. I'm not going to knock
VWAP,
trend trading. I'm not going to knock trend trading, but I'm just saying that in general, mean reversion has had significant benefit for many, many years, at least witnessed through my eyes anyway. So these are some symbols here with average performance for June 1st. So it has a number of longs, a number of shorts there. If the odds are greater than 50 on it, this is from our seasonality almanac calendar there. So both on the short side here and the long side, if they're greater than 50, then more favored to rise or more favored to decline. This number
Can
over
I
here
make
is
another
average
quick comment
performance.
here, Rob?
Yeah.
And
Mhm.
and you talk about win percentages and stuff. If you're doing one or two or three trades and you're doing the hot flavors of the day, then you got to have a very high probability and very tight risk reward ratio. But what we're trying to do here is cultivate, and we could talk about this with Dennis when he comes on next time. 51, 52%, 53%, man. He's just banging those all day long, and just that little probability, the little edge. So,
Well,
truly,
a fallacy is people that say, you're supposed to maintain an 80-20 win-loss ratio. I don't see very many people that could achieve that for any length of time, maybe for a short spurt, right? But why couldn't you have a 50-50 win-loss ratio, but just make more when you win
excellent.
than when
Yep.
you lose, right?
Good risk
Um,
reward.
I'm not really a big fan of the risk reward ratio. I'm more a fan of the expected value formula, which means that you have to calculate your winning outcomes as well as your potential losing outcomes, right? So you have to account for both situations. Like to set a risk reward relationship, you could say, I'm going to risk $1 to make $3, right? Sounds great. The question is this, Joel: what is the probability of the $3 outcome, and what is the probability
Excellent.
of the $1 outcome?
Excellent.
So I think there's a fallacy to the risk reward ratio being utilized the way it is. I mean, it's part of the expected value formula, but it's not the whole thing. I mean, I want people to be taking a trade to say, look, I've got $3 of potential, but I only have a 60% chance of that outcome. I have a $1 loss potentially, and the probable outcome is, say, 40%, right? That makes a lot more sense. So you're not going to make your full $3. You're going to make your expected value or your expectation. You're not going to make a full $3 because you might lose.
All right.
I mean, see,
Well
this whole
explained.
thing was taught to me by Bob when I first joined Bright. Was, it's about your sort of your theoretical, outcome, not your actual outcome. It's your theoretical, and you have to trade that way too. You have a theoretical that you could make $3, but 60% chance of that, right?
Yep.
And you have to factor in the loss side. You could also be stopped out for a 40% chance of losing $1. So that has to be factored in. Anyway, we can get more into that later too. So let's see here. We're talking about, so in this, if you move these sliders around, you change the universe. This is called the universe down here. So there's 287 symbols in here. There's 0.46% average change in this universe. This is 85% of these values are positive. So we can see that this thing is really skewed in this particular universe, is really skewed to the buy side, right? The long side. So if I was to move this volume or move the price, it's going to change the universe, and that may change as well. So this helps you sort of dial in. Basically, we're looking at what the SPY can do here, right? In this, so we look back here, we already saw what the SPY can do, right? 1% for the month. And for the first day of the month, what can the SPY do? It's 0.37 for the first day of the month. So now we're seeing that the percentage of symbols that are outperforming relative to the SPY is 57.8%. Okay. So flipping over to an ETF's view. So we see some ETFs. Does anything pop out at you that you like there?
Let me pop up this. Did you say something? You were gonna do something with XLF?
Yeah, well, I mean, just a sec here. We're going through this, and
How about the
seeing,
stocks? Do you got anything? I mean, the semiconductors have been on fire. We got the shortage. I
we
mean,
can look at that in a bit here.
okay.
So there seems to be more long ideas than short
What
ideas
about
for
the
June the
chat? You guys
1st.
see any ETFs you guys want to look at with Rob? Just put them in there.
So we can find instruments that have potential to outperform the SPY. That's what I'm focused on right now. Gold and senior and junior miners, as well as SLV, come into view, but they're only 50% odds. So they're kind of on the fence, even though if they do perform, the performance is good. But financials, REITs, mid caps, and emerging markets have visibly better odds. So let's take XLF from that list. So I type it in here, and what we get is that on the first trading day of the month, it's expected to slightly outperform the SPY, right? So from that, we can also test in the same screen any number of the ETFs we saw. I chose XLF. Next, we can go to the StockOdds web screener and look for the best odds for financial stocks. What we want is the best of the financials for our trades. Why is that? Joel, why do we want the best of the financials for our trades? Because then we could hedge with the XLF, or we could hedge with the SPY, right? We already saw what the SPY is going to do for the first day of June.
Betting on the favorite, right? Betting on the favorite, betting on the best in breed.
So I just did a performance screen only for the financials. This is what came up. So the way I like to do it is, say sort it by odds, which you can see the higher odds up here and the lower odds here. So what some people do is they take some of these longs and then they put them short, and that way they're in the same group and they're fairly insulated, looking to make money from the relative change in performance, right? Or you could say take some of these longs and hedge with the XLF, or take some of these longs and hedge with the SPY. So there's various ways to do this. But I like to then look at it through the eyes of a spread. So this is Discovery, which was on this list right here. You can see all of the symbols here. Where's DFS? Right there. So it has a 55 odds of being up. It was down in the previous session on Friday, right? So we can take a look at it and go, how does that look for a trade long Discovery and short XLF? Well, our starting point is a discount, right? Or you don't have to do the XLF. You could leave it standing as a potential hedge. You can just trade the Discovery if you want. So we could look at a number of them. I'll bring up my screen here.
You weren't really thinking Discovery is a financial.
No, they're all in the financial category though, right? So
there's
XLF,
some weird. That's another thing we could do on a different show. Is just like some of the compositions of some of this ETFs make you scratch your head.
Yeah, absolutely. Look, here's BAC, which you would say, hey, money centered bank is more appropriately a financial, right? Yep. So that's where it is. I mean, I don't know if you like that setup relative to the XLF, but this is the thing, is that within the sector, there's a lot of mean reversion going on anyway, because they're all, weighted in the ETF itself. So Capital One, do you like that better than Discovery?
Whatever the best probability. I mean,
right?
The only reason, I mean, it's just because I look at Discovery here and it's a pig. I mean, It got up to what, $78. It's consolidating. I mean, sure. Do I want to be a hero in Discovery? Do I want to call the bottom? Is this the bottom in Discovery? Let's see here. Low of the move. 30.56. When did it make that? Did it make that last week? I mean, the way I would look at it, yeah, I'm buying it at 32 and change, right? And 30.50. Well, there's a double bottom there. So yeah, that's the way I'm looking at it. But overall, and plus there's a lot of overhead supplying this one too.
Right.
Go ahead.
Right. Well, we can rattle off some of them in the you just look at them through your lens. Just throw it on the screen if you want. I can give you back the screen if you like.
Well, no. Finish up with your PowerPoint. No, finish up.
We're done on this one. I can just show the. I can go to the. Let's see here.
I just want to make sure you're done with your PowerPoint.
Yeah, that's it. I just wanted to go into some of the symbols,
right,
or we can roll back over to the.
How about? Wait, hold on here. How about the VNQ, the Vanguard Real Estate ETF? This thing got beat up. Real estate is back. I have no idea what's in this ETF. People are hunting for yield. Rob would tell me not to short it because it's making all-time highs. But can you give me something on VNQ, Victor, Nancy, Queen?
Well, VNQ's here. First trading day of the month is supposed to be outperforming the SPY,
Okay.
quite well. So
is there a trade there? John, I'm just throwing this out. These are not recommendations, it's informational, but from a probability standpoint, buying the VNQ and shorting the spider is a possible trade setup, correct?
absolutely.
Okay.
I mean, I think that was in our list here on ETF.
Make it simple, right, Rob?
Yeah, make it simple. So here we are, VNQ shows up here. VNQ is 100, there's the odds are 100% chance of performing at 0.71 for the first day of June. I mean, that's what you're looking for is, you know,
an edge
somewhere, right? Like,
Yep.
What else are you going to do? You know, look at, you know, out of the box, like just, oh, I think it looks like a good chart pattern or something. You want something more behind it and then use your other things to confirm your entry point.
One other thing I wanted to throw in there with like VN, and obviously with stock odds, you know, you have to have some experience. You have to have your trade scenarios. If you're doing something like VNQ, and I'm just eyeballing this right now, it's not a huge mover, right?
Right.
It moved half a point on Friday, you know, 70 cents the previous day, a buck I'm just eyeballing it. It's probably like 70 to 80 cents. So when you're doing these kind of moves, when you're taking the probabilities of, you know, most time it's near the average 9-day average trading range. That's why they call the 9-day average trading range. So I just wanted to do that. Let's for David Connor. I think David is new to this show. I'm not sure. David, are you new to pre-market prep in the morning or at the close? But David, he wants to take a look at IGV. Let's do that for David. Is that an individual stock? Let's see here.
It's an iShare.
Tax software.
Amex iShare, yeah.
Yep. What do you got for me?
Well, let's see if I even have that one. Some of them are reduced based on, well, volume's good on that. We should have it. So let me pop it in there.
Rob, what do you go for? Now I'm just when you're looking for the components in this, I go to Morningstar because I like to keep track of the S&P 500 and the top components in that. Where do you go to get your top components? I
subscribe to the ETF Pro database, so you have the breakdown of everything in there. I mean, there's other free sources like Yahoo and stuff to get, you know, a certain percentage of them. But if you want to dig deep, you probably best to go to one of the ETF specialty sites, right?
And another thing Rob just mentioned there, folks, he spends money to make money, right? He spends money on different sources of information. Dennis could rattle off the things that he does. I could rattle off the things that I
but I still won't pay for Bloomberg.
They might not want you.
Some things are over the top.
A little bit over. Okay.
But this is IGV, and so the expectation for the first day of the month is actually quite low relative to the SPY or the other financials. So I wouldn't be, you know, it wouldn't be a candidate for me that I'd be interested in long. But now look at its mid-month seasonality performance. So to me, there's something fundamental in the way that this performs at the end of the month and in the middle of the month, and it has to do with payroll deposits, 401k money, something like that. Because you see this anomaly right here, Joel?
I sure do.
The mid-month seasonality. There's a huge edge right here. There's something related to money flows into this product in the middle of the month, and then again a little bit at the end of the month. But that mid-month one is interesting. And even even during the week, you can see this goes back 10 years. We can see Wednesdays outperform, you know, the SPY handsomely. So that's what you're looking for, is you've got to find an advantage somewhere. And if you have the wind at your back, then it's much easier to trade these things than trying to fight it, right? So
Yep.
I just don't see much bang for your buck tomorrow, but I would be interested in this mid-month. So glad the gentleman brought that up. Thanks.
Yeah, and I'm just looking at the holdings here as of the end of March. It says the top one is Vanguard Real Estate 2 Index Fund. So that's kind of
Mhm.
interesting that that's their top holding, and that's what they are. American Tower, AMT, obviously, all the cell towers, boom, big stocks. Same thing with Crown Castle,
Mhm.
Prologix, Equinix, Public Storage, Digital Realty Trust, Simon Property, SBA Communications, and Well Towers. So, all right, Rob, 6:29 here on this
Hey,
Monday,
I
Memorial Day.
noticed I
Any final
noticed
thoughts?
I noticed Apple had a downgrade by somebody. I don't know if they're a great house, whether they're respectable or not, but I noticed that they had a downgrade. Let's just check Apple for the first day of June.
From Friday
Yeah,
or
was it?
an
I think it was from
yeah,
Friday.
I don't
Yeah,
know,
but
some bozo firm. I don't know who it was. I
okay.
mean, why would you downgrade Apple? When
Well, I
when
mean,
Gene
it's
Munster downgrades Apple, then that's when I'll downgrade Apple. But anyways, let me
well,
I
look at
shouldn't have
this
said
here.
bozo. Can we retract
Apple.
that comment? That
Yeah, you
firm's not a
retract that.
bozo. Okay.
Apple is one of those things that is used as a hedge against a lot of other tech stocks.
Interesting.
So look at this first day of the month. It's not expected to outperform the SPY, which it's a member of the SPY, right?
The
It's a
top
big.
component, Rob.
I get it. I know that. What I'm saying is it's not expected to outperform it. So you could use SPY as a hedge, or you could use Apple as a hedge against some much better components. And you can find them in the StockOdds web screener very easily. Find a lot of advantage things that would outperform Apple. If we can
All right.
find things that'll outperform the SPY, we can also find things that'll outperform Apple. Okay.
All right. It was New Street Research. It was Pierre Farragut. He downgraded it from neutral to sell. He has a price target of 90. I haven't heard of New Street. I haven't heard of Pierre, and I'm not selling Apple. I
He's
don't think.
well. I mean, if he's right, he'll get a name. Okay.
Exactly. Exactly. All right. Well,
You got to
listen,
take a
Rob.
shot
I
sometime.
just want to wrap things up here on this Monday evening here on Memorial Day. Spoos, they're not up 7.5, folks. They're actually down 4.25. We settled at 0250. We got a bounce overnight, 41.90. That was your pre-market low. The low tonight, 91.75. I'm going to see what happens in Unchanged tonight. Spoos went out at 0250. That's the highest close you've had in the last 10 days. Thursday's close is right there at 41.99. So just maybe this ballpark is 4,200. Quiet week on the downside. This trader investor here is not looking for any downside until we breach this 4180. We had a trio of lows from Tuesday, Wednesday, and Thursday, right at that area. Friday, that's a different thing. So Joel Elconin, along with Rob Friesen of StockOdds, bringing you pre-market prep with StockOdds, getting you guys prepared for Tuesday session. Just a special note, folks. Rob will be with me tomorrow from 9 to 9:25 a.m. starting a new thing, pre-market prep plus, and it's just going to be powering through tickers from 9 to 9:30. Rob is going to come in at 9 to 9:25 and get us some setups, and also at 10:30 Eastern Standard Time, Rob's going to join me again, and we're going to talk about the setups that we discussed right here on this show before it even happened on the Monday night before the Tuesday trading action. Check out my new site, folks, premarketprep.com. I've been working my ASS off on that. I did a write-up of last week. I did a preview of this week. Please go to that site, premarketprep.com. Check it out. Give me some feedback. Let me know what you want on that site. We're looking to give you guys better trading information, being ahead of the market, coming up with your own game plan, and we'll be doing that from now until the sun sets. Thank you very much, Rob. Have a good night. Back with you all tomorrow morning.
Have a great Memorial Day. Take it easy.